Good morning, everyone. So, Michael Chang is not easy to catch. Not because he's distant, but because he's closely involved in how Zand Bank is being built. Despite a demanding schedule, Michael remains responsive, accessible with a leadership style that is grounded, humble, and hands-on. His approach reflects a clear focus on execution as Zand operates at the intersection between traditional banking and the digital assets. So, hello, Michael.
Well, thank you, Val, for having me. Thank you for the time, spending with us for the next hours. And then hello, everyone, as well.
Thank you. So, Zand is often described as a digital-first bank. So, let me start with this, from the macro perspective. So, how do you define its role today within the UAE financial system?
Okay. I'm not too young and I'm not too old. So I joined the UAE back to 3 years and 3 months ago. With the limited knowledge on the
really
UAE.
You are really young compared to me.
Yeah, so with the limited knowledge, I try my best, try to compare, the UAE TradeFi landscape versus actually what we're doing today. So first, Zand is not a digital retail bank. Zand actually more focused on a digital wholesale bank. We focus on TradeFi product, but we focus also on digital products. Unlike the digital bank, where we talk about digitalization, user experience, where the main focus on the digital side on the Zand Bank is mainly on digital product. For example, like tokenizations, digital asset custodians, enable actually the crypto ecosystems, and also, of course, the stablecoins, which is we're launching. That's one aspect. The second aspect, we think that there's an emerging between the TradeFi and the DeFi, right? This already happened in the US and also in Europe. We are trying to catch the train. And then the third point, because of, when I back to 3 years ago, I remember that I tried to see what is missing in the market, where UAE leaders is very strong focus on, innovations, digital hub, and then also on the, be one of the biggest crypto hub. And I realized actually, the crypto-friendly bank is actually missing. So that's actually what Zand is trying to do. So in short, what Zand trying to do is where TradeFi is trying to understand how to do, where the fintech don't have a license to do, this is a sweet spot where Zand is coming in.
So this is probably my second question. You sit between two different worlds, like the traditional banking and the digital asset. What has been the most difficult part of making those two systems work together? In practice,
I think we are one of the first pioneers in the market. Yeah. I think the difficult part actually is to let everyone understand, what is missing and what can be actually leading in terms of a digital economy. We work very hard with the different regulators. We even start talking about stablecoin before even we have the regulations. This part is an effort for everyone to make it happen. I think difficult part is not to enable. I think the difficult part is actually how we set a healthy and also sustainable model, for the country and for the region as the first. Second, I think it depends on the market adoptions. Leaders push very much, on the crypto agendas, but also innovation agendas. The Zand Bank is not actually in just the digital asset, but we are also very active in the fintech space and also on TradeFi with the capability of AI and also the blockchain technologies. So this is actually the difficult part come in. Because when we talk about AI, I give you one joke. We bought actually 8 GPU, H200s, and then we thought we can power on in this building. And then after we have engineers coming in, they said we probably will shut down the whole downtown. And then we negotiate from 8 GPU to 4 GPU. And then they said you will shut down the whole EMA square. At the end, actually, we tried 2 GPU and it works. So at the end, actually, now we have to find a proper centers, to have power side. So this is the one part actually being difficult. The second part difficult, I think, in the UAE is the tenants. Good tenant actually quite difficult to catch, especially crypto is the digital nomad. Everyone working on the crypto blockchain engineers, they can be everywhere in the world. But if you want them actually to work in the TradeFi environment, sitting 9 to 5, and then it will be difficult. So this is actually the learning process for us as well. The third difficulty, I think, is to educate the corporate.
This is the hardest.
Yes. Yeah. One of the product we launched is called One Bank Two Worlds accounts. So if you have accounts with the Zand Bank, in fact, you have the fiat account, multi-currencies, but at the same time, you have the crypto wallets. Why we want to do that, you can imagine. So let's say you have
just
a
keep
trade
it there
product.
for them, like play with it.
No, actually, it's not for crypto trading at all. In fact, you can imagine. So let's say you are dealing with some import-export activities from Africa, where they have a shortage on the US dollar hard notes. At the same time, you have a capital control, right? So it's a very not uncommon the people using, for example, US dollar stablecoin.
Yeah.
But when you have a US dollar stablecoin and then the one actually on the TradeFi corporate road will be panics. Okay, all right. So whether you can receive the US dollar stablecoin, I don't know. And then I need to talk to blah, 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 right? But by default, if you have given actually a wallet, which is a crypto wallet, you will just call the bank. Can I receive the payment? So this is actually the proposition we have. When you mentioned about how we can link the TradeFi and DeFi, it's an education process, but also this process is quite difficult. But when you understand actually your capability and then you outpace any others internal opportunities.
So Zand AED, or I don't know if you give it a name already or not, your stablecoin was a long-awaited project, and I know that you already said it, that you've been talking about this before the regulation itself. So what was the core problem that it was designed to solve? So and who's it's primarily built for?
Okay, we apply actually, a while ago, and then so we have big visions on the stablecoin, because stablecoin is not for the purpose only for the crypto tradings. When you see in a different aspect, one is on-chain economies. No matter you're talking about like the DeFi world, or no matter you're talking about just a normal blockchain world, you need to have the fundamentals infrastructures. But when you have the fundamental infrastructures, it's like if I buy the ice cream. And then what is the value for the ice cream, and how can I pay the ice cream, right? But if you make it even bigger pictures, what if actually the ice cream come from somewhere actually that it cannot accept your currencies, right? So today, all the trade world is using US dollar for the settlements, but doesn't mean actually the country do not want actually to have a local currency. It's just because of by default for so many decades, and then we use US dollar for the settlement purpose.
Convenience.
Number two is actually that even though you have the US dollar stablecoins, so let's say you have A country to B country, they are not US dollar local currencies, you're not solving the problem, because on one hand, A country trying to send the money to the B country. When A country currency convert US dollar, it has to be when the time bank is open, right? Even though you have mint and burn process on the A and B country, but when you off-ramp, you still need actually back to the fiat. When you back to the fiat, it depends on also local bank whether it's open or not. The real solving on the problem is not single currency. Actually, it's a two stable coin of the country A and country B. In that case, you can rely on the real-time settlement system of the countries. So that means settlement on the stable coin is very depends on the developments on the stable coins, regulations in the country itself. Today, I think more advanced stablecoin regulation, of course, everybody waiting for the Clarity Act is the US.
Absolutely.
Europe, we have already top banks starting it, but there's a lack of liquidity as well. You will see also Asian currencies coming in, for example, like Hong Kong, Japan, also the Thailand, they're starting. We believe that actually when this is starting, in fact, it's not the matter of choice of TradeFi and the DeFi. It's the matter of actually what can do best internal efficiency. Today, only single US dollar is not helping so much on the efficiency, in my point of view.
So, do you see those regulators are coordinating with each other, and do you see any harmonization effort on this regard?
Well, I think the beauty of the currency world is that, like in the banking, for example, right? So we have the Bank International Settlements, BIS, where BIS will define the rule, where actually Basel will push to the central bank of the country, right? BIS is always very active on this, but we have to understand in a different way. When the brainstorming become a norm and Basel push to the bank, it's very difficult, because when the Basel, they try to understand what is the current framework for each countries, and then what is the standardizations. And don't forget one thing, Basel is still TradeFi. They still need to learn about actually the DeFi world. But I think it's happening.
They are learning very slow.
Yes,
obviously.
I think they are learning, but at the same time, actually, there's many implications. If we take China, for example, right? China actually is a place who start one of the starter of the blockchain, in fact, right? You can see most of the Chinese founders, from the crypto, especially on the big one. But then you question, if you have a technology, you have a know-how, then why don't you allow, to have a stablecoin? Why don't you allow for the capital, the crypto, right? The simple reason, because they worry about the AML in the first place. The second one, actually, the capital outflow. if the
outflow and control.
Yes, if the local regulation is not able to control, the fundamental problem, which is the base currency problem, stablecoin is not because of they don't like. It's a matter of in the holistic pictures, what is more important than the stablecoin is actually the capital control in the China perspective, right? The second perspective is that when you have a stablecoin, is there any standard in the world? We can talk about the ERC different standard. Doesn't mean actually that's the only standard. No. When you apply to the banking world, what is missing in the current layer is actually probably will be the AML control, the KYC control. And then there are many actually layer 2, for example, they try to implement this. But even though they implement this, you will solve only part of the problem. Today, let's say you are in country A, I'm in country B. You are being actually KYC by country A, bank A1. Doesn't mean actually your KYC can be passport to country B. So we are not talking about the stablecoin, harmonization. We are talking about jurisdiction and regulation harmonization as well. So the beauty, I think, is for now is AML is followed by FATF, the international standards. It's not that far. But if you deep dive a bit, actually, the gap is not only the technology. The gap actually is also the regulation harmonization as well.
I agree. So in the past couple of months, it was like a good wave of stablecoin issuers in the UAE, but it was somehow limited to banks as issuers. So how do you see the role of banks issuers stablecoin in shaping the trust and the adoption compared to global market?
If you
Zand, Fab, and
maybe we take a step back first, right? The stablecoin started from 2013. At one point, actually, in the US, more than 1,000 stablecoin, if you remember, right? At the end, actually, that's those with the liquidity actually will be the leaders, right? So today we have 2, right, in the US.
1.5.
Okay, let's say 1.5. I think this is a good one. 1.5. But why, right? If you think about the revenue model for the stablecoin, I take it from the business point of view, and then we go back again, to see the use case on the stablecoin, and then we talk about the UAE. So in the first place, why back to 12 years ago there are thousands of stablecoin, but end up with only 2, and then on the other hand, why actually the less people in the US has interest to make a stablecoin? Because if you look at the revenue model of a stablecoin, I don't take the name. If we exclude the investment, if we exclude actually the non-fiat based stablecoin like gold, 95% actually revenue come from net interest income, right? Today, in general, most of the country, including the US, Europe, and also UAE, you are given the guideline that you need to put your money in terms of a portion in the cash and portion in the high liquid assets, right? Now, if you put in the cash and high liquid assets, when you have a high interest rate, that's fine. So if you remember, actually back to 1 year ago, that was a 4% plus, and this year 3% plus, and likely will touch 2% plus, in the year later. Your interest rate, when you reduce 1% out of the 4%, actually you have reduced 25% of revenue. And then you go further, it's a 33%. Is it still actually an interesting asset, to make by yourself, or it should be only a users to use actually the liquid stablecoin? I think this is a question we should ask ourselves, right, in the first place. The second, you talk about the UAE. I think UAE needed in many aspects, right? How many will be enough? I will leave the question to the regulators and also the open markets. AED is a very powerful currencies, right? So it's a deliverable currency. It's pegged to US dollars, right? It's a common currency in the GCC, and then except for the QX, and then it's a welcome currency for the Africa because UAE itself being a re-export hub, to Africa's. Whether the Africa will welcome actually the dirham, but not only the dollars, the answer is yes, right? Now the question is that if you have a limited space, let's say UAE is using currency X, but not the dirham, and only using by the country itself, then the business case become less interesting, right? So if we follow this, no matter which bank they're doing, I think there's only one single focus is how to use the stablecoin to capture the cross-border settlement, right? So because by doing the cross-border settlement, you capture not only the interest income, but also the on-chain FX income, right? So that makes the things interesting. Now, back to the use cases, I think in the Zand point of view, we are not making actually one coin for one purpose, even though we actually send to central bank 7 use case, but we're not limited. It's like at the same time, at the first time when the country make the notes of the currencies, you will not be limited to use, like you can only buy the stuff and you cannot buy the house, but you cannot buy the car, right? Once you issue this, everybody can use it. It's a matter of how you can control better compared to the fiat currencies. So this is our philosophy. But if you want to go deeper, what exactly the agendas, for the Zand, I can tell you in a different way. There are 65 banks, in the UAE, with a population only less than 10 million people. Why you think in the first place interesting to open a bank? And why you think a small bank can be outperformed, than the other bank? So you have to find the differentiators, right? The differentiators is because we are taking advantage that, the TradFi is really emerging quicker, to the DeFi world. But the DeFi offering is still missing or slowly happen. So that's why actually we're trying to mix, the component of, tokenizations and then the stablecoin, like programmability of the smart contract with the existing actually activities. For example, supply chain financing, right? Having a stablecoin actually is not too much helpful. You can capture the FX on the stablecoin FX, but on top, you can differentiate also yourself with the programmability. So you can make the supply chain more efficient, and then the SMU, you can imagine, they are relying on how quick the cash turnover can be happen to them. Yeah. But by using a stablecoin instant settlement, that's one thing. But you can evolve as well. For example, you cannot wait for the stablecoin settlement, but you can evolve the stablecoin, for example, like the very conventional like invoice discounting, right? By that, actually, cost will be much cheaper, right? So I think it's a final benefit to everyone. If you take another aspect is that tokenization, you have many products, but can you buy from the fiat? You may not be able to buy the fiat, for example, like in a DeFi world. So you need to have a pairing of the currencies. Whether you want to pair with the US dollars in the local economy, maybe not, because at the end, the merchant want to receive actually the dirham. Yeah. So that's a meaningful reason actually why the people making stablecoin on the dirham, but depends on how the market move and also how the adoption rates. Yeah.
One of the things that you announced probably a week ago or something, the collaboration with Ripple. So I don't think that it took what it deserved of attention. Like people didn't really figure out how what does it mean. From my side, what does collaboration unlock from payment to liquidity, from payment and liquidity perspective, and how does it fit in your broader digital asset strategy?
Sure. Our stablecoin actually launched already in the exchange. Live already, right? So we first target on institutions before we go to the retail market. And then we will have a second exchange live in the coming 2 weeks. So this part actually that's create some of the use case happening actually in the crypto world, crypto exchanges that can also pair with a tokenized product if the exchange has a tokenized product. Now, today, if you look at UAE, there's a lot of expatriates where they need to send the money home, right? And then...
I'm one of them.
Absolutely. I'm one of them as well, right? 90% expatriates. So partnership with the Ripple or the other partners, in fact, is trying to solve also a few problems. Number one, actually, the financial inclusions, right? We are working in the large group. You can imagine that's how many blue collars where actually they have a low salary, right? Suffering from the service fee, but also the markup for the FX spread and all that. All in all, it could be something like 5 to 7%, off from the original things. By having more efficient cross-border rail based on the stablecoin, where in the Ripple they are using XRP blockchain, they are using our USD, and then we are using our dirham stablecoins. We can actually create liquidity pair, and this liquidity pair can significantly lower, the cost of the sending money. But when I said the remittance is only one of the case, and this also applies to B2B flow as well.
I asked this. I didn't want to promote Ripple even, but I asked this question because I wanted to hear it from you because people really didn't figure out what does it mean. Though it's a big thing from your side. So Zand now, and this is something I told you about like a year back, and I'm repeating this again. So Zand serves a big portion of the VASPs in the market, and somehow people might say that this is a big concentration of risk on Zand and on the VASP and the whole digital ecosystem. So how do you defend this? Sure, you didn't stop other banks to do the same like you, but somehow this is the talk of the town. So how do you come back on this?
Okay, the answer last year and this year will be different, by the way.
Obviously,
yeah. We have the blessing, from the clients, and then because it's a positive word of mouth. When you're supporting actually crypto, the ecosystem, I mean, it's not a matter of whether you want or you don't want, right? You have few things you have to solve. The first one is if it's the dirham or the dollars, I mean, you have to solve the settlement and clearing problem, right? Being a non-US bank, for example, I mean, a settlement through the US clearing bank in the US is always a headache. But if you're the onshore US bank, and then you have less headaches. So whether actually the participant bank can solve this problem in the first place, right? The second one is what is your risk appetite defined by your board, right? So if your board actually giving the risk appetite actually is quite limited, it's not a matter of the technology. It's not a matter of you want, you don't. It's whether you can do this activity in the first place. That's the second angle. The third angle, try us. You will see the main difference. Our tech stack is very different. I don't name
you've been accused that you are expensive as well.
We are not expensive because I cannot tell you the regulation in detail, but I can share you a little bit of color on this, right? I go back to the tech stack first, right? This is very proud of ourselves. Imagine you have your cloud in Japan, where my cloud in the UAE. And then if you want to do atomic settlements, you have to first solve the problem. It's a distant problem because there's a latency between Japan and also the UAE. And you could also suffer from a timeout. But what we do, actually, we can do the sub-millisecond settlements. If you can ask actually any network engineers, cloud engineers, you will see this is very difficult. This is in the first place. The second actually is that, we are talking about the bank when we talk about digital first. Why we call our digital first? Because we less focus on the UX UI, to be honest. We very focused on the tech stack in terms of API, in terms of how elastic dynamic you can grow your business. This is our focus on, right? By doing this, actually, you can enable not only a UAE company, that is also one of the objectives why we want to go to the corporate banking, because when you go to corporate banking, you're serving the client internationally, not only the single market. On-chain also the same. So that's why the tech stack has to be very good. Now, when you mention about expensive, I think that people do not understand one thing is that why actually that's before Zand, the crypto actually was not being better served, by the banks. We have to understand the problem is not only for the bank, but also on the control perspective, on the regulator's point of view. So
and the risk appetite from the banks as well.
Yes. So you can imagine, right? So let's say Exchange X, there's a client of the Exchange X. Now the bank trying to serve the exchanges, right? So what will happen actually that the client of Exchange X will have a virtual IBAN under the bank. So you have an omnibus account. But at the same time, the KYC done for the client X, the client of the Exchange X is actually done by the Exchange X, but not by the bank.
Yeah.
How you can ensure that actually the KYC of the client of the Exchange X is well KYC in the first place, right?
You have to do it again.
Second is that how you ensure that actually all the activity are legitimate, because these are the crypto flow. This is not the bank flow. But when you come to the bank, it's a payment flow. You have to also solve this problem.
On-chain stuff.
So when you talk about expensive, maybe we are not cheap, but I think that people misprice the things.
Effort.
Because you have to do, for example, like the monthly assurance program, independent audits, sampling, testing. And then you can imagine these are not the easy work. These are very heavy weighted actually in the compliance side and also on the payment side and also the automatic control side. We have built a lot of things based on the AI, based on also the upskill actually on the compliance. I give you one example. We used to have only 6 compliance officers. Today we have 21.
It's the biggest cost center
so you can imagine
organization.
It's an investment. At the end, actually, we are not a charity organizations, right? We cannot say is everything free of charge, and then at the end, actually, I eat up all the bullets. So that's the reason for that. I think that people need to understand the expectation on the UAE regulation is very high. You should not even compromise any risk. So that's why, in order to meet that standard, it's very costly as well.
So it was my second question was gonna be about compliance. So everybody look compliance as a constraint in the space, and especially in the digital asset space. So how do you see Zand compliance standard as a competitive advantage rather than a limitation?
Since the time we launched our custodians, digital asset custodians, it's the same. When the people custody the digital asset to your custodian platform, you perform the same, right? You perform the KYC, you perform the KYB, you perform the KYT, you already apply, the travel rule and all this. So from that time, actually, we already educate and also upskill compliance functions. The same time, we hire from the market who is on the Web3 side on the compliance to understand really the business, right? At the end, actually, the theory will be the same, but the tools are not the same. The data source are not the same. So by this, actually, that's you have to split in two teams. One team is a conventional TradFi team.
Old guys.
Yeah. But on the other hand, actually, you need to have a so-called Web3 compliance team. And this is not an easy piece. And that also explains to you why it's costly, because the people did not price in this. You cannot using conventional model to monitor actually the Web3 activities. I'll give you one example. When the payment happen in the TradFi world, it's very simple. Who send? Who is the senders? Who is the receivers?
Travel rule applies.
What is actually the country origin? What is the status of the country? What's the purpose? And what's the currency? And what's the amount, right? But when you apply actually on the Web3 world, at least multiply by 5,
you have
right?
to follow.
How can you do that before timeout? You can't do it before timeout when you have a real-time screening. So that's why you have to invest also in the tools. But when you invest in tools, unless you invest in AI tools, otherwise it's impossible. So that's why we call ourselves the Zand actually is an AI power bank, because you have almost no choice. If you want to have some time-sensitive, activities, you need to invest quite heavily on the AI.
So, last and reference to my start introduction. So, as Zand continues to grow, how do you personally stay close to the businesses while managing the organization as a CEO? I know the answer personally, but I want people to hear you.
Yeah. When I interviewed the role of CEO of the Zand Bank back to 4 years ago, it took me 9 months actually to decide to join the bank because I have very different thinking. Where unless the board actually buy in the ideas, otherwise I think I will not be able to help with the bank, which is actually the niche proposition to start. Why you have to answer yourself that why you bank to Zand, right? By this we have for example like digital asset differentiators. We have also other differentiators. Today, compared to 1 year ago, we are not building only the bank. In fact, we are building different pillars. So we are building the AI pillars, we are building the investment pillars, we are building, if you look at actually the portfolio of the Zand, in fact, the people focus very much on Zand only on the digital asset side. But in fact, we are quite proud ourselves in also the other pillars. We focus on energy, properties, fintech, digital asset. We do offer corporate bank products, cash management, global market, but we offer also the wealth management, asset management. I'm trying to say that, in fact, I'm much more busy compared to the last years, but I think I enjoyed it. To answer your question, I think as a CEO, you have to do two things. Number one, you have to be passionate about actually what you're doing, and then you have to see the thing is like your own business. In that case, you are quite difficult to be sleeping, but you will be quite early, wake up from the back, and then you will be recharged quite quickly as well, to go to the subjects. So I think the third point that's what you mentioned about that, you have to be hands-on, because if you're not able to hands-on, you may miss out, here and there. And then unless someone actually can have a full picture like you, otherwise you'll be difficult.
Just to again put it on record. So yesterday. Almost midnight, you confirmed the meeting to me that you just noticed that we're gonna meet today. So yeah. So anyways, let's try to forecast the time and talking about the growth, talking about success. So how, if we're sitting here within 18 months time, 12 months time, how do you value or how do you measure the success of Zand? Where you're heading, and where hopefully not all sides, but just tell me where you're heading and where do you see the success and the growth of Zand?
Maybe from 3 angles, right? So first one actually that we will make a solid on-chain banking platform, right? Second actually is the geographic expansions. The third one I cannot tell you now.
Physical expansion.
Yes. So meaning that we are not only having a UAE as a banking license, we will go beyond UAE, right? So we are setting up also the outside UAE, and then we are setting up more activity as well. In the second quarters, and you will see we are launching also the SME banking. And then we are launching also the AI banking as well in the later stage. I think the number of activities, the number of product is one of the KPI you can measure about the success. But I think the one of the most success I cannot announce today now. But try to follow us in the second half of 2026, and then I'm sure that you have a wow.
And I'm always following you. Thank you for your time.
Thank you so much for having me.
This was Michael Chang, the CEO of Zand Bank. A special interview, at least from my point of view. Hopefully you will enjoy it as much as I did. Thank you.
Thank you. Thank you, Khaled. Thanks.